All right. Good morning, everybody. Welcome. First Marketcast call of 2025. Hope everyone is getting off to a good start. Not too many crazy things happening for me, although got a nice Buckeye win to start the year off. That was kind of cool. Excuse me. But outside of that, came back from our Disney trip the day before, and really just been taking down Christmas ornaments. Got up this morning and shoveled a nice, I don't know, 6 to 8 inches of snow off the driveway. Of course, put it in a nice big pile because I know I have an 8-year-old running around here who's going to love to play in it. Market looking pretty good here in the short term for sure. But I don't know that that negates some of the, obviously at the end of any year, we analysts get a lot of questions like what we think, and I don't know, dime a dozen. But my opinion was a little concerned with what we may encounter this year, specifically in the first quarter and or half, due to some of those bigger picture items that aren't really technical analysis related. I did finally dig up a lot of the. I mean, I've made a lot of references to a lot of things, and so I've tried to dig up all these. I focus on kind of. And not only do I focus on it, but I coach it, staying in your lane. Do what you do well. Let somebody else do the other stuff. And that's kind of what I do. So I let VIX experts be VIX experts. I let volume profile experts be volume profile experts. Economic guys, do your thing. And kind of, you know, what I do know, what we do. I mean, there's one thing that I don't do I obviously don't do ever is really break down what's on my chart here. So I have gotten a couple questions I've noticed stack up over the past month or two. Excuse me. And even going back further, ever since they moved the Marketcast call over to this format and on YouTube and such. Um, so the bottom, just the RSI. You know, um, I think not bragging. I'm just saying I'm pretty sure I've been able to call every major correction the market's been through since I started coaching, and I've been able to do that just by that RSI down there. That's the thing that has allowed us to do that. We were able to call the 2022 bear market. We were able to call the 15, 16 correction. We were even able to call the 2020 drop, but it's just kind of weird that you'd be able to call something like that. 2007, 8, 9 bear market, right? We've been able to call them. That's just a momentum divergence was what it allows to do. So it's not me, so nothing to brag about. I'm just reading the market here, what it shows us. So that's what the bottom, but it's larger scale too, by the way. So let's be clear that we make those calls based on weekly, but usually monthly, right? So those of you that haven't seen it, okay, I'll pull it up for you real quick. And once you kind of know it, it's kind of like, I don't know, kind of obvious, right? But like I said, it's not me, it's just read the market, right? So, so when I started coaching, this was the very first one I ever called, right? Big market, these are monthly. This is a monthly, big picture, right? Momentum divergence, shit hits the fan, right? Momentum divergence, oh, here we go again, right? Momentum divergence, hey, look at us. Momentum divergence, oh, wow, right? So it wasn't too terribly hard to call 2022, okay? So, you know, when it comes to the technical analysis side of things, right now I don't see, there's nothing like that as far as what I look at, and I stay in my lane, okay? So I think My understanding, my experience, my knowledge leads me to believe that all successful analysts and or traders stay in their lane. So Elliott Wave guys aren't out there usually worried about the 8-day moving average, right? VWAP people aren't typically too terribly worried about, right? Fill in the blank. Bollinger Band lovers, so forth and so on. So so when it comes to those bigger picture things, like especially when it comes to a fundamental or economic things, I let those guys do that thing. For us, RSI really the main thing to look at there is those divergences and such. If you look at this little pullback, we were watching this daily divergence. Now remember, this is a smaller scale, so not quite as reliable at times. The bigger we go out, the more reliable. These little dotted lines are always trend lines of importance. So right now, pretty clear if you look back, very, very nice form. So if we want to watch going into this year, one thing to keep in mind, let's go back here. Let's go back because when we see those big momentum divergences, and I'll probably discuss this later too, because we're now going to start creating little pieces of content around this. But notice this. This was that momentum divergence. Now it looks weird because we're on a daily, but this is that monthly line you just saw a minute ago. So we knew the environment was right. We needed a price confirmation. We got it on the channel breakdown right here, right? Perfect, clear, multi-tested channel. We took it out. That confirmed the momentum condition. That makes sense, right? Rally back up, hit the underside of it. All she wrote. Those of you new to these calls, you can see this green. These are all just levels, important prices of interest. Okay, support resistance. No, not necessarily. Important levels, right, of interest. So notice the S&P here, by the way. Doink, doink, doink. Follow that green line. Doink, doink. So do you see how it wasn't too hard when we called all-time highs are now coming and we eliminated any kind of bearish belief? Okay, because we're not going to break through a major, more than 1 year level tested that many times and think that we're not going to take this out, right? Now we stopped there for a little bit, just like we'd expect. Pulled back, hit it again, pulled back, ta-da. So this entire run was forecast. And notice how, by the way, I didn't need all that other stuff. I didn't need BWAP, moving averages, Bollinger Bands, Elliott Wave, Fibonacci. Didn't need any of it. Okay, price is king. Price discounts everything. Price is the only thing that pays. I encourage all my students and members, how about you start looking at it? Okay, don't tell me how great your VWAP is or whatever your cup of tea is if you're losing money and you're not looking at the one thing that matters most, price itself. Okay, keeping in mind, investors and traders were doing just fine before our wonderful software programs giving us all these squiggly lines, right? So that's what you're seeing here, just multiple different levels. I don't know why this one's dotted. Who did that? Somebody dropped the ball, right? So that's all these are. These are just levels of interest. These are trend lines. I don't know that this one matters, right? We got 2 points. Just putting it here just in case we ever get back down there. We'll get down there eventually, right? Sometime in history, we will pull back far enough for this to come into play. This is the one, right? So let's flash forward 3 months from now, 6 months from now. Let's say we do see a weekly or monthly momentum divergence, right? We see that form. I'm not going to start shorting things because of that. I want to see price confirmation. Well, look at this wonderful little channel we have here, similar to we had a wonderful channel back here. Okay, so that's what that is. And these are typically trend lines, and that I've just drawn that have shown themselves to be important. This trend line by itself, people would probably draw at this bottom one. I don't hold a lot of weight to just connecting any 2 dots you want. Okay, I like to see it tested multiple times. So a third, a fourth, a fifth. Okay, as I like to say, we as people, we can connect any 2 dots we want. Doesn't mean the market cares. But if we test it a third time and a fourth, that's the market now has taken over and is drawing that line for me. In this scenario, though, we're talking about a channel. So do we have multiple tests? You betcha. Here's your resistance test here, resistance test here, resistance test here. So not only is this resistance valid, but now we have a valid channel. Okay. So if we go to the moon here, might be worth knowing where this line sits, right? If we do get a momentum divergence or just a sell-off, it's going to be good to know where the bottom of this guy sits, right? So that's what you're seeing here. Outside of that, very, very hard to see, but I try to keep it out of my way. So this is the 200-day moving average, the dotted one. I don't use moving averages in my trading or analysis, but I do respect as it pertains to the S&P, Dow, the major indices, that these things can pop up and create those support or resistance, right? Look where the market stopped on Friday. The S&P stopped right at the solid one here. Very hard to see, but that's the 50-day. So I do respect it through there. Okay. Something I used to look at forever ago that I just decided to slap back up on my screen, and it's one of the things that allowed us to call the rally last week off Thursday's low. Okay. First off, non-confirmations. S&P hit a new low of the sell-off that was not confirmed by the Dow. So again, I don't know that I'd make a trade just on that, but that's one. But a big thing for me, and we have talked about this over the years, is when the VIX doesn't confirm sell-offs. Okay, here was the previous low. Here was last week's low on Thursday. So think of it as the market was like, yeah, no, we're hitting new lows, but who cares, right? Not that big of a deal. I'm ready to start buying. Okay, but when you combine that, okay, with again, if you pulled up Bollinger Bands, it would typically default you to like a 20-day moving average. But again, this was way back 20 years ago when I was taught and I started learning. Something I found to be very reliable was a 30-day with the standard two deviations. Wouldn't make trades based on that, but when you combine that with the VIX and you put these things together, it tends to have a pretty accurate win rate. About 3/4 of the time, you will get a rally of some kind. Doesn't mean you're going to new highs. Doesn't mean the overall sell-off's over. So you kind of see those things. And now, you combine that with we came right off this dotted line that was not only the resistance area here, but support. And again, and again, and again, and again. Looked like we were putting in that head and shoulders. But as I mentioned last week, I start to get a little nervous when everybody and their grandma is pointing out a pattern like that. I don't document it, but my memory seems to tell me that every time everybody's talking about it is when they fail. You know, so so we came off support. VIX didn't confirm it, and we made it down to the bottom. And when you puncture that band, a lot of times, again, you could be ripe for the taking there. So, but again, all decisions are made on price. What is price telling us to do? So recapping everything that's there. So technically, when I say technically, this stuff, and as of right now, big picture, I don't know that, again, I would never call a major high of any kind and never have without one of those momentum divergences. And every time I have, right, make it very clear it's not a guarantee, but it has transpired every time, right? If you remember that chart I just showed, we've only had 5 occurrences in the last 25 years that the S&P has put in a monthly momentum divergence. And so far, the S&P is 5-0. Now, will it always be undefeated? Obviously not. Some point. But are you going to bet against it? Because I sure the hell ain't, right? But it is just telling us an environment. Right now, we don't see that. So when I talk about the things that we worry about going at the end of last year, I'm talking more about, for example, and maybe I don't need to pull up each one of these graphics, but I think sometimes a picture is worth 1,000 words. So let me see if I can. So you guys can see why there might be some concerns when you pan out big picture. Remember, we're doing shorter term stuff. Let's see, let me pull these up. No, that way. Let's go back here. Whoa, well, that didn't work. Let's try again. Okay, here, yes, it will. All right, let's start with. So this is one that I talked about last week. All right, everybody see that? So I've been talking about that yield curve uninversion. So it's interesting when you hear the clowns and the hacks try to mock when this first inverted now over 2 years ago, which this is the longest, as you can see. Well, it doesn't show at all, but I think this is the longest inversion in history. By the way, can everybody see it? Just want to make sure. And you can kind of tell a fool when they say, see, it didn't work because it, inverted 3 months ago or something. Okay, just want to make sure. Feel free to chime in, though, everybody. Don't be shy today or ever. Otherwise, we're going to stand here and do nothing until I hear somebody confirm, because now I'm asking, can somebody even hear me, right? So feel free, So take with this information what you will, okay? When you talk about a recession, those clowns and fools that act like they think because the yield curve inverted and there was no recession that somehow it didn't work. Well, if you look back the last 40 years, it never has. The recessions have come after the uninversions. Okay. So obviously you can see the point I'm getting ready to make here. We just did. If you go back 40 years, a recession is followed every time. Many will lead you to believe one way or another that this time it's different. And in all fairness, maybe it is. But I promise you, if you've been in the market these past 40 years or 20 years, they said it was different then too. If you were here in the dot com bubble like I was, supposedly it was different. If you were here with the housing crisis, I remember repeatedly hearing how there wasn't a problem in housing, right? They had whole webinars with quotes from everybody from Bernanke to Paulson to Bush to Kramer to you name it. Everybody saying everything was fine. Not Kramer. I think it's somebody else. Right? So, take it for what it's worth. That's one. Try a different one. And these are the reasons why I'm just a little concerned. Where's another good one that I found? How top heavy. This is nice. Everybody see this one? Market cap of the largest stock relative to the 75th percentile and the current weight of the top 10 stocks. Everybody see this? And now again, take this information. I am not a, perma bear. I'm not a doom and gloomer. Okay. But I do think pictures speak 1,000 words or whatever the phrase is. Okay. When you look at these two measurements, we are now kind of more top heavy than we've ever been in history. Could it be different this time? You betcha. But are you going to look at that graphic, right? And are you going to make that statement with confidence? Because I don't know that I would. You know, I mean, I know that I wouldn't. And who knows? Again, maybe it is different, right? So what else? What else we got here? So we got that one. Who else? Here's another one. And the reason I pulled all these up is because I've been talking about them. I think it's always easier if you just let everybody see it for themselves, so they can kind of. This one here. This is the civilian unemployment rate with a 3-year moving average. And if you notice, every time that little black line cleared the little blue one, guess what we got? And to be clear, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 occurrences in the last 70 years. And it is 10-0 in forecasting a recession. Again, take it for what it's worth, my friends. We already looked at that one. And this one just kind of reinforces the other, but we'll look at it here. So these are the metrics that have me a little concerned about what we're looking at in the first 3 to 6 months of this year. I think the market, and by that S&P and NASDAQ at least, I think they go on to hit new highs. Seems to be what we're looking at to start the year. I get a little bit more concerned from there on. Because remember, one thing we do know for a fact, market's not going to go up forever. Right? There will be another bear. There will be another recession. And if you listen to the bobbleheads and the talking heads and the suits out there, they would lead you to believe it's never going to happen, right? Anybody ever listen to the mainstream financial networks? And it's like it's just never going to happen if you listen to them. There's no reason ever. It's just everything's always just fine. No, it's actually not. Okay. So I thought this was interesting when you look at this just kind of reinforces the other graphic, but when you look at the top 4 stocks, and what they accounted for. And when we do the math for you, these 4 stocks accounted for over 40% of the S&P's move. Now, why does this type of thing matter? Right? Because in a nice healthy bull, in all a bull board market, we would tend to want to see a little bit more. Doesn't mean people aren't hitting new highs. Doesn't mean stocks aren't rallying, right? But as far as where's the lion's share of the work coming from, so when you get more and more top heavy like that, as you saw, okay, that tends to be a warning sign. Now, I do think the market, again, S&P Nasdaq. Um, I think the Nasdaq's got a real nice little bullish setup here. I think we probably, pop to the new highs, and then we'll see. We'll look at the momentum divergences, see if they're appearing, see if they're showing up. But for now, in the short term, which is what we focus on, again, for me, technically, big picture, I would need to. Nothing has really appeared that we would look at, but it will if what we're seeing in those other graphics are going to play themselves out. Okay, and obviously, time will tell, right? So a bunch of stuff, stuff and some things. Now I'm going to pull up some stocks here worth keeping an eye on. But any questions, comments? And the bottom line, that I would say with all that, is just don't get caught with your pants down. Don't be one of these fools that think the market just goes up. Because let's be clear. Let's look at this, by the way. All right, because this is where something. This all looks great, right? Nothing weird when we look at this, right? Okay. However, what if I showed you this? What if I showed you that? Right? It's not a measuring tool or anything. It's not a timing tool. What do you think? Right? Could we be cruising for a bruising? Who knows? Right? What do we all know? Things that go straight up in the air like that. What do you know? What do we all know? If you've been with me, at least, okay, if you've been with me more than a year, I've said it once, I've said it a million times. Things start shooting straight up in the air like that. It's a fact. They always crash. Don't know when, but they always do. Right? You go back here. Here's your .com, or right, even better. Look at that. That's the S&P. To the moon, Alice. So there's your Dow. Right. Now, if we adjusted this, you're gonna see a little difference if I turned it to a log, but I don't know that it changes, right? This was a wonderful run. We got that. This was a nice run. We got that gem. What do you think might happen when this thing decides to call it a day? And how many of you, again, you don't need me or any other analyst or some dude at Goldman Sachs. Does that look sustainable to you? And especially if you have experience in the market, right? We've done this time and time again. Okay. Time and time again. What happened, to uh, all those, oops, what happened to all those work at home stocks that were just going straight in the air, that were fundamentally justified? What happened to those? Right? Was it sustainable? Right? Nope. Right? Remember all of our buddies that we looked at like that? Um, is this pulling up? Oh, it's because I don't have my stuff on there. Remember our buddy Lemonade? Is this not going back? I feel like this isn't going back far enough where our little crashes were. Can't get this to move. Or has it just been that long? Maybe it's been that long. I'm not going back far enough. There we go. Yeah. So it's just time has passed. Let's trim it in here a little bit like that. Oh, it doesn't change it. Yeah. And remember, every time. Who's our most recent buddy that we've talked about? How many of you are in my services where we said this would end badly? Don't know when, but show me the time it didn't. Right? Remember our little guy, MSTR, right? It's not the first time MSTRs went to the moon. And what we've been saying, it will end badly. Always does. Every time, all the time, my friends. So now, getting back into the market, I mean, could that be this year? Sure. Could it be 10 years from now? Sure. Just kind of be informed and, you know, blah, blah, blah. All right. Like that. Can I adjust for inflation? I don't know if I can on here, or at least I never have, but I don't know that it would make a difference. Parabolic moves always work out every time, right, Ryan? Every time. Yeah, Zoom. Thank you, Wade. Zoom was another one that got destroyed, right? And we knew it was going to happen, right? Just like the weed stocks before that. Remember the shippers back in the day? They always do. Remember the meme stock? It's not an if. It's just a matter of when. So I would apply that to exactly what we're seeing in the market. It's not, in my opinion, it's not. I don't see. It's not even an opinion until it never until somebody can show me a time where it didn't happen. It's not an if. The market will crash hard at some point. Just when? I don't know. Right? Not going to pretend to. What I will say is, if we see one of those monthly uh, divergences pop up, I think that will be one of those times where we say, "Is this the one?" Kevin, that's the one I was trying to pull up. I think I had the wrong. I didn't go back far enough. The 4 years. But yeah, that one's a beauty. Look at that guy. Who was the one that? Who was the one that Kramer got made fun of? Because he basically called it at the high. Shoot, it was one of these. It'll come to me eventually. God, which one was that? No, it doesn't. GW, it doesn't matter. You're in a different lane. You're not in the lane that I am. There was inflation and deflation, all those kind of things. Okay, again, you're subscribing to the idea that this time it's different. It's not. That this other thing would make it different. It won't. Markets do what markets do, regardless of environment, right? Every single time, supposedly there's a reason we did this and did that, it's different. Adjusting for inflation wouldn't make a difference. Right? Heck, you can make the case the market already does that. But anyway. All right. So real quick, let's look at some stocks. I want to cover Amazon. I really like, very similar to what we're seeing on the Nasdaq. Okay. Nice little pop through there. Would love to see it happen. And it looks like it's going to happen probably today. Right. We're getting a pretty good look here at a 1% day. By the way, how many of you are in the Tesla trade? Whoop, whoop. It looks like we're in pretty good shape. I'm trying to decide how far we want to let that thing run. If we got out around 4:30 on those calls and we closed the puts out too, it would recoup everything we lost last week. But here's what you want to ask yourself, right? You want to get emotional. You don't want to, right? As I always say, I don't care about the whether we're up or down, right? We got to pan out the big picture. Okay. If it looks like we're going to take this thing out and run higher this week, do we want to? Is this one of those times where we have the potential to get to say 450 or maybe even new highs again? Right? Things are already up 13 in the pre-market. Right. Flip side, we have a lot in the trade. But anyway, so keep your eye on Amazon popping through. We can't really trade this, but it's a little too thin for us to do anything with. But I was looking at this guy, this GEV. Speaking of Tesla, there obviously, um, we liked VST at the end of last week. Looked pretty sharp. One that we really liked right here. They did finally take out that 350 mark at the end, so you got to love this thing to move higher. Look at that clear shelf right there, right? So you take that thing out, which clearly, if you look at the pre-market, we're probably going to. This is one we like as well. A short play, I think, worth keeping an eye on is Conoco. Might go right up to this 102. This could be a short play. Nasty little breakdown. Coming back up to the underside. One would think we hit resistance and we work our way down. Right, so that could be a nice put play. And obviously, Amazon's going to break on through right out of the gate. Another one I was watching, semiconductors, by the way. Okay, so here with SMH, I mean, you got this 255, but you also have up here this trend lines. I think bottom line, you put all this together, and this thing's probably moving higher. Right, this pop here today. Okay, we know that this 255 mattered in the past, but you can kind of see a couple examples where is the market telling us I don't care as much, but then here you are respecting it again. This trend line was tested 3 different times, as you see. Okay, 4 if you count this little guy, 5 if you count Friday's pause. So this would seem to imply time to start taking a look at the having a little more confidence in the Nvidias and all those guys. I don't know that AMD is my buddy, but if the stock can take this 120 back, I think that makes some sense, right? And who else were we looking at today? CRM could be a short. Well, what I would say without even looking is if we just called for the market to go higher, right? I don't know that I want to try to fight that unless it was something that we thought was that had already broken down or was out of the realm of the market, right? So take Conoco for example. A, it's already broken down. Okay. B, it's oil linked more than anything, right? So, and it hasn't been moving with the market. I'm probably a little bit nervous about something like this. Obviously, starting off a little weak here, but I don't know. Maybe if it failed to hold that 330 that's been holding it up, maybe that could be looked at. But we're seeing a lot of stuff up. I mean, like we'd expect to. We're not going to trade Meta ever again. Oh, I remember what we liked last week. It was ARM. We liked no, who was it? ALAB. Well, might miss the boat on that one. It's kind of already moving. But if you look at the whole semi space right here, SMCI, we know that 35-ish, 36-ish mark, right, matters, right? We hit the resistance there. We hit it again here, support here, right? We go back to here and before the split. So if we could take this out, if we do think we can get another week, 2 weeks, or maybe a couple months of rally, could be setting ourselves back up here with SMCI. Speaking of that family of people, ASML, real nice day today. Waking up. Yeah. Okay. All right. So that's what we got. But yeah, stay safe out there, friends. And again, I would be thinking, we were thinking bullish coming into the day. Voila, here we are, moving higher. Love to see the Nasdaq take that out, the 100 here, take this out, and that would be, give us some pretty good confidence in new highs. S&P, okay. I don't know if we can get above 6,000. I think you start, I don't know, maybe 60-40 here if we take that out. But I would think bottom line, if the 100 is running to new highs, S&P probably is. That's another thing we'd look at too. One thing that has marked a lot of major peaks over the decades is NASDAQ going it alone, right? And nobody else joining it. Let's take a look real quick. I mean, it sure doesn't look like, this doesn't look like something going to new highs, does it? This is the NYSE, not just 100 stocks, okay? The Dow's only 30 stocks, but it's an important 30 stocks. These, to me, look very bearish. They look like they're winding up for a breakdown, And we have seen that this year, right? Where the Dow, Russell, and NYSE are all doing one thing. The S&P and NASDAQ are doing something else. So we certainly could see a scenario where we're running to these new highs over the next month or so, right? S&P and NASDAQ do it. These other guys don't. But we'll obviously update it as we go along, right? All right, so good stuff. Certainly looking like a setup for a good week, a positive week. Santa did not come, so we'll see how that works. Whether you're talking about Santa Claus rally, January barometer, or the January indicator, all these things, they tend to be more reliable when they're positive than they are when they're negative. So do keep that in mind. But I guess I would word it simply as odds seem to increase of an up year when those things go positive. Or maybe better is like odds probabilities increase that we don't have an up year if they're negative. Right. So in other words, the Santa rally, I think when it's positive, I think it's something like a 75, 80% probability the year is up based on history, that is, historical probability. When it doesn't, then I think it's something like only like 50, 60% that the market, drops, right? Odds increase. Now, then you combine the first 5 days and then you combine the January barometer. So I like, what's his name, with the Trader's Almanac that puts them all together. So if you get the trifecta, so in other words, Santa didn't come. It certainly looks like the first 5 days are going to be positive. But then what happens with the month of January? People like to look at the month of January. So we'll see how they go. But so far, 0 and 1, Santa did not show up. So we'll take it from there. Otherwise, hey, I will see everyone next week. All right. Or everybody's in prime time or Gambit, Paragon, LTS. I'll see you guys this week. Talk to you later.